This is one of the most fear-induced, crazy, emotional times in the market, but it's also one of the clearest and simplest times in the market. In my opinion, the people who understand and recognize the game for what it is, the veil has been pulled off, the mask is gone, and the centrally planned, predictable, cheesy economic outcomes that await us in the future are so easy to discern right now that the people who get this are going to make crazy money in the future, and the people who don't are most likely suffering from just one thing, which is a lack of patience. Today we're going to talk about the markets tumbling in what seems like a confusing reaction to the Fed, but if you really break it down, it actually makes a ton of sense, and overall the direction of the markets seems fairly predictable. I believe, as I'll make clear time and time again, on the other side of these market conditions comes an amazing opportunity for people who are able to predict, wait patiently, and then buy into the new market cycle when it predictably eases up economic conditions. Let's get into it, but please destroy that like button. Make sure you leave a comment in the comment section below. Make sure to subscribe, share the videos. You know the deal. I appreciate you all. And as a reward, here's a picture of the new Trump NFTs. Yes, Trump just dropped some NFT trading cards. Anyways, these put a smile on my face. I hope you enjoyed them. Let's dive in. Right now, the markets are absolutely tumbling, and it leads many people to wonder why, because we have the Fed coming out raising only 50 basis points, which was a slowdown from the 75 basis points that the market was expecting. The Fed slowing down on interest rate hikes was exactly what the market wanted to see in terms of forecasting some kind of Fed pivot. But it's actually not that simple, because based on what's called the Fed dot plot, the Fed leaked that it was actually going to keep rates higher for longer, or at least it predicted that it would have to. And actually what's happening here is an even bigger issue, which is the issue of the Fed credibility. Effectively, we started this whole scenario a year ago, or over a year ago, with the Fed saying there would be no recession, inflation is transitory, soft landing, all of these things that progressively got wiped off the board. No more use of the T word, transitory, no more use of the S word, soft landing. These are all no-nos now. And we have the Fed moving into harsher and harsher talk as inflation hangs in there, very sticky, the jobs market way too hot, which of course causes more inflation. And overall, they know the truth, which is that inflation ain't going down or away as soon as they hoped it would. I found a nice breakdown of this by Mr. Bob EllioTrades here. It says, as expected, FOMC tried to throw a wet blanket on beliefs. Inflation is tamed, easy to tame. Fed will step back meaningfully from fighting inflation. In the end, the message was rejected by the bond market and trivially acknowledged by stocks. A thread. So here's where we get to the big issue. The Fed is losing their credibility, and many would say they don't have any credibility. I get that. But in this particular moment, we all gather around the fireplace, gather around the TV, we grab our popcorn, we grab our snacks, and we look to see what old man Jerome Powell has to say about the future and the fate of our global economy. It's absolute madness. I found this tweet by Dylan LeClaire pretty accurate. Every FOMC meeting where global currencies, bonds, equities, and commodities move in tandem based on the words of an old man, I can't help but think about how laughably sad the entire damn system is. It's all just an elaborate dance for liquidity. Now, this is what we've been talking about. When you understand the macro, you understand the debt cycle, you understand the liquidity cycle, you understand that as they remove liquidity from markets, number go down. As you understand when they add liquidity to the markets like they did in 2020, number go way up. So it's really just a dance, understanding where the liquidity is. It's the same in all markets, in cryptos, in NFTs. Where goes the liquidity often goes the big gains. Or in other words, IDKY, you people complicating things. Fed tighten, you tighten. Fed sell, you sell. Fed spending, you spending. Fed ballin', you ballin'. Amen to that. But as much as that's really scary, essentially putting your money into the markets, it's like betting on the ending of a horror movie. You really have a good chance of getting this right. Once you understand when the Fed is very serious about adding liquidity to the markets, you add liquidity to the markets and you bet alongside the centrally planned economy. But as you can see from these Fed projections, inflation is projected to run well above their targets well into 2025. Now, if inflation's transitory and there's no recession, how are we going to get inflation lasting through 2025? Well, the reality is that the cautious macro bros that have been telling us, hey, look, this is a really difficult situation to get out of, are starting to once again be proven right. In the end, we don't know how long this cycle is going to last. It's very likely at this point that 2023 will be the year that we really start seeing the pain of some of these decisions. Again, all this stuff takes a while to work itself out. So the most important thing you can do right now is effectively outlast. I've been saying this for a long time, but patience, hoarding cash, living within your means, learning new skills, grinding, this to me is the most important thing you can do right now. And while you don't have all the time in the world, time is on your side. Right now, we have the most brutal bear market in history where assets are going to be on total fire sales. We just got word that Goldman Sachs is actually looking to buy crypto companies for pennies on the dollar and invest widely across the ecosystem. So if you're worried that sweeping legislation is going to make crypto completely illegal or kill the industry, think again. What's happening right now is that the big money bags are trying to get their claws into this industry before it totally takes off. This is the dot-com bubble-esque moment where things get reduced to rubble. Everyone looks back at the wet and wild bull run and says, wow, that was all a scam. There's nothing real there. And out of the ashes grows an Amazon, grows a Facebook, grows Web 2, grows all of the huge important innovations that we now rely on as basic infrastructure for humans. Now, I'm going to talk about this time and time again. This is the last bear market I believe that we'll see in our lifetimes before AI becomes commonplace in consumer products. And AI is going to completely transform the economy by effectively reducing human labor and the value of it to very, very little, if not almost non-existent here. And you need to be planning around this. If you're not planning around this, you're missing one of the biggest technological innovations up there with the internet itself. And of course, Web3 technology. AI is going to revolutionize everything. It's going to change everything. And there's still a chance to get ahead of it. But that chance and that window's going to get narrower and narrower as time goes on. I really believe this, and I'm going to include this in every single one of my videos going forward. The dawn of the AI era is upon us. It will wipe out jobs across the world and reshape the economy as we know it. It will also cause rampant inflation because there's no other way to keep a population of hundreds of millions of people calm, cool, and collected as all of their jobs get automated away without the use of excess spending, of stimulation of the economy. So understand, this moment where they're contracting the economy, where they're removing liquidity from the economy before the dawn of AI is upon us at a commercial level within the next 5 to 10 years, you better believe this is a once in a generation, probably once in a lifetime opportunity to either build businesses that leverage that AI or to become owners in shares of stock, shares of protocols, owners of scarce assets that will benefit from the rapid devaluation of the dollar after AI becomes commonplace. To me, there is absolutely no other option. For now, please enjoy AI-based video descriptions because let's be honest, I don't have time to write these in my busy day. And yeah, this works good enough for me. So take a look at this, take a look at the video description, and make sure you smash that like button and subscribe if you enjoyed these videos. But I want to reiterate one more thing. I'm going to slam the table about this because understanding that this bear market and how bad it might be before the dawn of this technology and what it's going to do to the economy, what it's going to do to asset prices, it's absolutely insane if people miss this opportunity. And quite frankly, it very well might not be possible to catch up once the wealth gap explodes to the levels that it's going to explode to post the commercial AI takeover. So this to me is the time to fight. It's the time to get scrappy. And I plan to make as much content as I can to make sure that this community is on the right side of history when the time comes for the markets to expand. A brief note about Gigamart is that we had tens of thousands of users try the product the first week. We are iterating extremely fast. Gigamart is the first marketplace serving creators, serving users, and as a builder who it's been my dream to have a product like Gigamart Live for years, now is the time where you can actually watch and interact with me as we build this product live in front of you. We built some shit, you liked it, now we're gonna build some more shit and you're gonna love it. I promise you this tech is undefeated and we cannot wait to change the NFT game. Please go and support this tweet. Go and support Gigamart on Twitter. And if you are browsing for NFTs or anything NFT related, check out gigamart.com. This is just the beginning. We're going to build the entire way through the bear and make sure that when we emerge on the other side, there is a community first, user first, decentralized marketplace for everyone to rely on that has the core ethos and values of crypto at its core. Anyway, that's it for me. If you want to see me, I'm going to be doing more live spaces on Twitter. I'm even going to be streaming, playing some video games with some other Web3 guys. I'm going to be experimenting with all kinds of content to get us through this bear together because on the other side, magic awaits. I believe that, but we have to get through this time. And I know that content creators got me through the last bear. So if my content's helping you, then please don't be shy. Smash subscribe and I'll see you on the next episode. Goodbye.